I'm Dan Fitzpatrick at StockMarketMentor.com, and it is Wednesday, February 17th, Hump Day. I want to look at Taser here. First, the company reports earnings in, 12 days to be exact, on February 29th. We got plenty of time to get in and out of this trade. Look, this isn't a volatility squeeze. I really like the way this is setting up. Members, I'm kind of ranting and raving about the market and how volatile it is and stuff is overbought and oversold and blah, blah, blah. Really, really brutal market. But when I see something like this, okay, the stocks come down quite a bit, and hey, you all know what Taser's about, right? Shocking. But when I see a volatility squeeze like this, and at the same time testing this trend line, and on a shorter duration here, actually breaking through the trend line, this kind of a volatility squeeze, really, really tight. All I'm looking for is one thing: higher volume. And that's actually what we got today. Just about average volume here, but this is average volume over the last 50 days. And over the last 50 days, we got some pretty big, massive volume spikes. So if let's say we drop this, make it 20 days. Okay. Changes a little bit. Not that much. We can make it 10, we can make it 15, and this will go up even more. The bottom line is, though, this is popping out of a volatility squeeze, so it doesn't really bother me as much that you've got 2 up days in a row, that the stock is up over 10% in just the last 2 trading days, because it's coming out of a volatility squeeze. So my suggestion would be you go ahead and take this trade. I'm talking about a long trade to the long side, buying the stock, and then just see how she trades up into earnings. Again, you got 12 days before earnings, and this stock is starting what I believe is an earnings run. One thing, in case I'm wrong, because I know you'll find this very, very hard to believe. I do, but I actually am wrong sometimes. So tipping a hat to that possibility, you keep a trailing stop on this position and put a trailing stop on of, say, 8%. Start even with 5%. Wherever you buy the stock, if it falls 5%, you don't want to be long. By the way, it's up just 5% today, so you get an idea of what the magnitude of that is. It would have to be a complete reversal in order to stop you out. I don't see that happening. So you take a little bit of stock as the stock starts running, you got your 5% stop in, and then you take a little bit more as the stock's rewarding you for being right. And if the stock is not rewarding you for being right, well, don't buy it on any pullbacks, because that's not what volatility squeezes are all about. Not right now. This is still in what I call phase 1. And if you want to know more about phase 1, phase 2, phase 3, you got to be a member of Stock Market Mentor. All right, hope you try that out. By the way, it's a free 30-day trial. That's on me. These days, I think that's a pretty good trade.